The Rebel Capitalist Show.
Yeah.
Whenever I'm talking to people, they always ask me my advice, and I say, listen, I can't give you personal advice because I don't know your situation, but I can just tell you what I do. And I didn't know anything about investing prior to 2012. I just had to kind of teach myself.
Sure.
And one strategy that I came up with, and I'd love to get your feedback on whether this is crazy or maybe there's something to it. And I always said, okay, I'm just going to divide my portfolio into 3 buckets. So I'm going to have one bucket is for what I would call insurance. Yep. I would have another bucket for investments and another bucket for speculation. So I define the insurance by just physical gold. Because I'm just trying to protect some purchasing power there. Sure. The investments is something I would buy that has to pay me to own it. So whether that's a rental property, whether that's a dividend-paying stock, I've got to be paid to own it.
Yes.
And then the speculation is just, I'm not being paid. I just think there's a lot of asymmetry there. So uranium might be a good example of that. And I just do 10% insurance, 80% investing, paid to own, and then 10% speculation. Yeah. What do you think about that from a professional standpoint?
That sounds very sensible to me. And I think some people... the speculation is important because a lot of people, that's what you enjoy doing, and it adds a bit of pizzazz and gives you something to talk about at cocktail parties. So I think anyone who plays it too safe in stocks is probably not being true to themselves. You do need to have a speculative element to your portfolio, and I do that with small mining companies, exploration stocks, mostly in Australia. Canada obviously is a huge market for that as well. But yeah, I mean, that's a perfectly good strategy. And the investing bit of the portfolio, as you say, the cash flowing investments, I mean, how can you go wrong? If you own a great business that's paying lots of dividends, or you own a great rental property that's paying back more cash than you fund it with in the mortgage, I mean, that's a sensible way to long-term wealth creation.
And so on that dividend note, I know a lot of people, they love a dividend play. They love to get paid, but they're like, well, if I'm getting a 10% yield or 10% plus, there's got to be a reason for that. Most likely they're going to stop paying the dividend for XYZ reason. But I'd like to kind of point out to people that might not have traveled extensively outside the United States that in these countries, and I'm going to specifically point out Colombia. Yeah, almost every one that I've been to like that, and I've been to over 40 countries, they always have like their local beer, as an example, and it's just a staple, and it's on the soccer uniforms, and it's not going anywhere. Like in Colombia, it's called Club Colombia, or Club Colombia. Club Colombia has, I don't know how long it's been in existence, but I can promise you it's going to be there for the next however many years, because it's just it's part of the country. It's part of the whole culture almost. So we're in these countries that you look at in Asia, and more specifically Africa. Do they have companies like that are just a cultural staple of the country? And there's there's not a 0% of them cutting their dividend, but the chances of them cutting their dividend are just incredibly low.
Exactly. You hit the nail on the head. So another fund manager in this space, a very interesting German fellow, originally he migrated to the US. He's out in California. He and I compare notes sometimes. And his strategy when he first started in these frontier markets was to always buy booze, banking, and cigarettes. And because people need all those things, or you don't need to smoke cigarettes, and that's thankfully going out of fashion in a lot of countries. But yeah, exactly right. So in the markets where I'm looking, same thing. In Tanzania, it's Tanzania Breweries Limited. That's the biggest blue chip stock. In Kenya, you got East African Breweries Limited. The company I actually personally think is probably the best beer company in Africa is Namibia Breweries Limited, down in Namibia. They have a really great beer too, besides anything else.
Double whammy.
It's great. It's probably beer o'clock where you are, actually. It's early in the day with me. But so those kinds of companies here in Indonesia, a lot of people still smoke. I think about 80% of Indonesian men smoke, and I actually own one of the tobacco companies here, HM Sampurna. It's part of the Philip Morris Group. Not much chance of that dividend being cut. So you're exactly right. And as these things compound over time, I mean, you might have bought it 10 years ago, and 10 years later, all of a sudden you're collecting double the dividend that you were back when you bought it. So your yield has actually doubled in that time. And people don't think
of your
these
cost basis.
things. Yeah. So, based on your cost basis. So, in a lot of these frontier markets, the returns available on investments are just that much higher. So dividend yields of 10, 12, 14%. You shouldn't compare them to companies that yield those kinds of dividends in the US or other developed markets, where usually there is some kind of financial engineering at play to be able to juice the dividend up, and that adds to the risk. The reason that you get these big numbers in a lot of these other countries is simply that the investment opportunities are still there. The returns on capital that you can get are very high because these countries are not flush with capital. So that's a great thing for your readers to think about, your viewers to think about as well, is that you have your capital, you might be able to generate 10% return on it in the US, but if you go down to Colombia, all of a sudden a whole different world opens up. Same in Africa. A lot of guys with entrepreneurial business ideas, but not much money. So if you come along and you provide the money and the expertise, that's a real opportunity, and that can be both in listed and in unlisted investing spaces.